Hey everyone, what's up? This is Mozart speaking. So, what do we have as of the morning of March 11th? Bitcoin dropped to a low. It was. It almost reached the yearly moving average. This purple line right here. But it didn't quite make it. Just a little. Right now, it's stuck between the 200-day and the yearly moving average. This is the buffer zone. Doing anything here is really a thankless job. You're playing roulette. Sounds good. Either buy somewhere around here if it comes down to this level with a long stop like I usually do. Or buy higher. Buy higher where? So realistically, to get back into a normal bull market, we need to buy one of the last dips. The last dip was right here. So ideally, we need to hold above. There are marks at 90.5, but better at $91,000. Right here. You can start buying again on the pullbacks here. At the very least, we need to hold above the mark. They're at 87.5, 88. At the very least. And even then, it won't be 100%. It'll be more. Guaranteed. To go long after we hold above the 91 mark. This is what I see on the chart. Because the picture here is twofold now, it's definitely twofold. So this is the engulfing pattern. We fully executed, with a margin. With a small margin, but we executed it. Yesterday, we fully executed it really well. We did everything according to it. But there's another pattern that hasn't fully played out yet. So basically, this is a double top on the 4-hour chart. And with it, it feels like we're just a little bit short. Just a little push somewhere, I don't know. So either we hit the range, or the yearly moving average at 75,000, or we go down to S4 at 71,000. With an increase in volume down if we start pushing down. So, this is the chart. What could happen right now? Right now, we're seeing a small bounce. After reaching the 76 mark, the fund is also correcting a bit. The Nasdaq got totally crushed yesterday, like really bad. They really crushed the thousands, even harder. Tesla dropped catastrophically. It dropped from its peak like a shitcoin does, 55% already, like a meme or something. It's dropping. What can we? So now we just wait according to the chart. So, like we closed on the get keys. I wrote about this yesterday too. So it was completely closed here. We have a gap above, and its closure will be around the mark of about $87,000. Well, somewhere over there, closer. Somewhere over there. What's interesting is that the Bitcoin futures didn't drop below the 200 moving average. They stayed above 200. It's an interesting pattern. That's the difference. So here, Bitcoin looks stronger than on the futures. So, it's possible that there will be a return to 87. Maybe. But, right now, just jumping into a long position, waiting for 87, purely for a bounce, with a long stop that will be much longer than this take, doesn't make much sense. I don't see it. So there's a chance, yeah, that it will bounce back to 87 and close that gap. Considering that overall, during the day, everything is totally oversold. And even just within the bounce, even if it goes lower afterward, that could happen, for sure. But, for a more confident long position, I mean, I've already told you. What? That's what needs to be done. Or wait, in my opinion, for these levels. The nearest yearly moving average, or for a perfect hold above 91,000. We're buying up the last drop, absorbing it. A drop, a V-shaped reversal, and we continue the bullish market calmly. Right now, the situation in the blockchain looks like this. By the way, as soon as I get into Bitcoin, I'll let you know. I'll write in the Telegram channel, as usual. I'm just thinking out loud right now for those who are interested. My thoughts. I'll put the link to the Telegram channel in the description below this video. In the blockchain. I don't like that the day before yesterday, we went into the negative funding zone. March 9th. Even though it's not a huge negative, it's still a minus. On average across all exchanges. But we quickly bounced back, even despite coming from there. Overall, the fact that we went there is bad. And we went into the negative. That's where everything started back in April 2024. For now, they're holding on. For now, it seems like the funding has bounced back, but this is no longer just a strong correction. Although in terms of percentages, it's significant. Just purely in terms of percentages in a regular market, yeah, everyone will say 30%, that happens, it's normal. There's really nothing special about it. But the thing is, the liquidity of this market is different. And there was this. The total liquidation volume has gone through. How about that? In this 30% correction that the market has never seen in its life. Such liquidations during similar corrections. We need to correlate this. It's not just the plain percentages, those are just numbers, but what really happened to the holders. And right now, all the short-term holders are in the red. They're all in the red. So even on average, the percentage of Bitcoin supply and profit has dropped to, as of yesterday, 75%. But that's not much. It's bad that we fell below 80%. So, for example, that's where it all started. Somewhere around June of 23, it was also around 80%. Then we dropped all the way down to 73. July 5. If 80 doesn't hold, then that's bad. This is no longer just considered a strong correction. It's starting to be seen as a borderline state with a bear market. A borderline state. And right now, most likely, there will be some kind of chop in a certain range, after which the market will decide whether we're going back into a bull run or heading into a bear market. This is already that level. This is already a level that's not just a strong correction, but a boundary, a zone with a bear market. That's what the realized profit to loss ratio is saying, which has dropped almost. Well, not to zero. But who gets it? So on average, 45% of people are making a profit from Bitcoin. Who can make a profit? Well, the long-term holders. Also on this dump, they're selling off the Bitcoins they bought back when it was around 40, roughly speaking. It's assumed that it could go even deeper. Well, during a panic, people are also selling off, objectively. We've dropped to a deep level. So even in 2024, the minimum level was there. We were falling based on the ratio. We're getting close to that level again. It dropped quite rapidly below the green line, the so-called safe line, only back in August. To September of 2023. Next, what I don't like is that the liquidity of stablecoins on exchanges began to fall, and standing ones began to be burned. This is also visible on the stable chart. The green line at the top, it started to fall. I don't like this. It's attacking. That is, this is such a cut already in the medium term. Well, conditionally, in the short term, closer to the medium term, they light a tether. I don't like that. The depth of the correction is significant. 1.5 sigma by MVRV metric. So, market value, realized value, with a 1-year moving window. We dropped to -1.5 sigma. A rare event. Rare. We didn't drop like this even on August 5th. Although back then the bands were wider. Now they're narrower. But, still, the last time we dropped like this, if we don't consider the bear market. That's why I say this is a borderline situation. So here we are either here or right here. And right now we're waiting for some kind of bounce and then a move into a bear market. Either this is a state similar to what we had in 2021. Here we didn't touch the blue line, but the volatility was higher back then. So, how much these envelopes were expanded here, and how much they are narrowed now. Yeah, there was less liquidity here, which is why the volatility was higher than it is now, in 2024 to 2025. And to say, for sure, right now, given the current state of the market, I can't take that on. I can't say, what happened? How February closed, in terms of seasons, cycles, fractals, and the position on the chart. Yeah, as I said, it was unlikely. Scenario. This scenario was unlikely. That is how it was. There was nothing else that could be thought of. But even that anything unlikely. Any unlikely event eventually happens. Trump really helped a lot with this. Unfortunately, that happened. I didn't rule it out, but objectively, it was unlikely. Objectively trading while always thinking that everything is going to crash is foolish. You won't make any money. Never. Trump wrecked all the markets with his statements. And not so much with his statements, but with his policies. Nobody understands his policy or what he wants. Today he introduces sanctions, well, duties, and tomorrow he cancels them. The day after tomorrow he says again, oh, I didn't actually cancel them, I left half of them in place. The markets don't understand him. That's why the dollar is falling, and the stock market is dropping. Yesterday, the Nasdaq dropped. In this rare decline, a daily drop across the entire Nasdaq. Crypto doesn't understand, and, accordingly, there are risks in the markets. People are already starting to talk a lot about a recession. Maybe that's Trump's strategy. Maybe he wants to push everything to make Powell turn on the printing press. Maybe. So it's quite likely. Yeah, maybe. But he's risking a lot. There's only one shot at this. He's taking a huge risk. Big players might start to liquidate. Somewhere. Good luck trying to keep the market from those liquidations. There you go. Moving on. So, about the short-term ones. They had two major losses. The first one was on February 26th, down 11% from their average entry point. Yesterday was the second biggest drop. This kind of thing often turns around for a bounce. Often, very large losses. Not the maximum, but still double digits. Big wars. So, if we take a look at how this looks visually. 1 and 2 got a bounce, 1 and 2 got a bounce. I'm talking about these bounces. Here's the bounce, see, the bounce. By the way, this is spring-summer 2024. It often happens that after such two blunders, we get a decent bounce. But in this case, as I mentioned, you see this bounce? It was just a bounce, before the next drop. The question is, how far will this bounce go, where will it stop, and will it cover any important levels? And the number of short-term traders, or still in profit, is just 15%. As of yesterday, who managed to buy in about 6 months ago, somewhere there, to the November lows. Well, basically, below the current values. In the span of 155 days, and these are all short-term traders, managed to buy in there. There are few left. And we also fell below this level. As of the beginning of July. Then there was a bounce, but then we went even lower. This is definitely stressing me out right now. Since the situation is now borderline, a borderline situation if. Before, well, I could take a long position. Here, average down with double the volume. Here, you could have held on. While we're dropping, from some upper moving averages, the spring is stretching, and I still always manage to come out in profit. Well, you can see that from the overall channel. There isn't a single losing trade there. The last 3 trades, 2 closed in profit, 1 at break-even. I got out yesterday at 82,500 break-even. Right now, you can't do that. You can't stretch it that much now. You can start stretching it again when we break through, right here, if we go long from here, and then head into a bear market. Okay, I'll stretch it to 1,000 down to 55, and at worst, I'll break even. On average, but maybe I'll make some money. Most likely, I'll make some money. In this situation, this is the range. 200, yearly. The same goes for the weekly chart. A week closed poorly. Not good. 1, 2, 3. The weekly trend's breaking point has been broken. Last week, the volume was above average. They broke it. We haven't reached the yearly moving average yet. Objectively speaking, looking at the weekly chart. What options do we have here? They could be. First, from an objective standpoint, a bounce, somewhere to the edges of these channels, that were broken earlier, right here. Exactly 87, maybe a little higher. It could get pulled up, maybe up to 90, I don't know. And an attempt to test it one more time. This yearly moving average. Either we don't go anywhere and just drop straight down here, right away. And here is a good, perfect point. Long. Basically, we're covering all the Trump rally. Basically. It also has to go there. I wrote about it yesterday too. The level of maximum pain for the short-term traders. The so-called yellow line. They have $71,000 right now. The last time we touched it, August 5th. We hit the absolute bottom there. Everyone jumped out, and we turned around. Back then, we also hit that yellow line. Right now, it's at 71. That's -1 sigma. That's -1 standard deviation from the average entry for short-term traders. This isn't based on MVRV. This is a different metric. Using the average entry, MVRV considers the whole market, not just short-term traders. That's why I can't come up with anything new for a week now. Either we go long somewhere around here, or we wait until we break through and hold above the 90 mark. We're staying right here. Let's consolidate, and on any pullback we go long to continue. 2 options. The current zone, especially, is right between these 2 moving averages. It's totally unclear. A complete gamble. It's a total gamble. It's an unclear zone for the week. For me, it's somewhere around the current prices, like 80. or even 77 to 87. The range is $10,000, maybe even up to 90 on the weekly. Sure, I wouldn't get too worked up about it at all, and I definitely wouldn't get into the meatballs. That's how it goes. They rolled out total 3. I said that at 720, we could make billions of dollars. We hit 720. Yesterday it hit 711, 712. We touched the yearly moving average on total 3. It's a border. Here is the alto. So if we bounce back now, to keep this bull market going, we need to close above the 920 mark. Right here. And here you can get back in the game. I'm talking about trading, not just trading. Buy it and hold it for 100 years. No, I'm talking about trading. Where would I get back into trading? Well, either we close out below the yearly moving average. Bitcoin is heading for 71, while the altcoin is going for 100 and 200. It's coming back. Trading it out. That's it again. Trump rally. It's coming back. 600, 580. Well, right now there's strong support, really strong. The yearly moving average. We touched it at the beginning of July. And then we broke through. It was tough to break through again. In August, we tested it for a while, just kind of hovered right above it carefully. And we went up. This is the boundary that separates the entire altcoin market. It seems the altcoins are bearish. Not all altcoins are in a bear market. If we take the top altcoins, not all of them are in a bear market. Not everything has rolled out like those memes. This is total trade, SUMAR. So, this is the 50-day moving average. This is the boundary. It's about the bear market. So that's that. All the signals will be given in the Telegram channel. And those are my thoughts on the market for now. Thanks for that. This was Mozart. Have a great day, and goodbye everyone.